This is Finance Career Launch, the show that helps you own your career. This podcast is just one component of the Finance Career Launch member community, which provides the training and support to help you develop, contribute, and advance. If you're not yet a member, go ahead and register for no charge by visiting financecareerlaunch.com and clicking that big blue button. When you do that, you'll get instant access to the video series, The 7 Pillars of a Successful Career in Finance. Hey there, this is David Mariano, and you're listening to episode 70 of Finance Career Launch. If you're new around here, welcome. It's great to have you. Great to have you listening. If you've been around for a while, you know that I usually have been using these midweek episodes to cover a listener question or just a specific topic that can help you own your career. But today we'll be continuing our series about investment banking, because that's where I get a lot of questions, and I thought I'd do a little mini series on it to answer as much as I could in a couple of episodes here. So we're in part 3. Part 1 was a few weeks ago, reasons why investment banking is a great career path. Last week we covered the unique career paths within investment banking, and then today we'll be getting into the truth about investment banking, some of the things that are tough. I mean, the first week we covered a lot of the positives about the career path and why it's great. And this week I want to dive into some of the things that might be a question for you, things that you might hear from the outside, some of the negatives about it, some of the things that make it a tough career. And we'll just dive into that. And then next week we'll wrap it up with my story about how I get into the industry. So I want to just preface this episode with 2 things. The first week we covered a lot of good things about the career path, and I've been doing this for a while, and I'm in it for a reason. And I'd say that every career path has its pros and cons. Everything that I'll talk about today is not necessarily unique to investment banking, although some of it may seem that it is at first. I certainly started thinking that some of this stuff was unique to investment banking, and come to find out there are a lot of other career paths, a lot of other areas of finance, let alone other areas of business that have a lot of these same things, just at different varying levels and magnitudes. The second thing I'll say about this episode is I'll try to report to you how it is currently, and some of this has to do with my experience or other people that I know in the industry. This is not necessarily how I think it should be, or where I think it might be or could be in 5 to 10 years from now, because things definitely seem to be changing, especially on some of the cultural issues, some of the cultural characteristics. And if I were to redo this episode 5 years from now, it might sound very different. So I just want to let you know that I think some of this stuff may be different in the not too distant future, but I'll try to tell you about what's going on right now, what I see, and what you might want to consider. Okay, with all that being said, number 1 is, in general, the business is a bit of a roller coaster. Each transaction that you work on has its ups and downs. I mean, things one day could be going very well, and then the next day someone changes their mind, something changes in either of the businesses, and things can just fall apart. In fact, this happens frequently. Not every transaction gets done, and so it can be a very up and down type of business. So every day can have its ups and downs because you're usually working on multiple transactions at once, and one could be going very, very well, one could be going very poorly, and so having to switch back and forth between those thoughts and those processes for yourself is one thing, and then also just between different clients and then different businesses that you're working with. So just know that that's part of the business. It also is a roller coaster because of economic cycles, and this is probably no surprise, but markets go up and down. The economy is good and bad, and that certainly impacts what we're able to do. Now, businesses like ours, we try to have different services and product lines that allow us to do things in most parts of the economic cycle, but it's not always easy to switch back and forth between those things, and it's not a smooth transition, I say, most times. So it does have its ups and downs, and you just have to be able to adjust in those scenarios. Then the last thing I'd say about it being a roller coaster is, because of all those things, your compensation and career path can often have those same ups and downs. If you are, it's not a secret that large firms often hire in the boom times, and then they have to get rid of a lot of people when the economy goes south. So you can, at certain levels of your career, you can end up losing your job. Your compensation can be up and down. One year is a great bonus year, and the next year is not. If you're at a smaller to mid-market firm, maybe they try to keep everyone, but everyone has to take the pain of the compensation. That doesn't necessarily mean you're working less and doing less, but your compensation could be very up and down. So just something to consider if, depending on the personality you have, is that something that you're willing to sign up for? Okay, the second thing I want to talk about is just the competitiveness of the industry. People often talk about the competitiveness of how competitive it is to get into the industry. And yes, that's true, but I would say that the work itself is really difficult. I mean, when I look back now, getting hired, I think, was hard. It was a project, especially when you're young and trying to figure all that out. But I would say doing the work over many years is even harder than that. And here's why. One is, you, as a young person, as if you're trying to transition in the industry, you could get hired. You could be very good on paper. You may interview well, but I've seen it where people get hired and then they really don't do well in the job for a variety of reasons. It could be a technical issue. They seemed smart, had good grades, answered some questions well, but maybe really couldn't do the work, couldn't think strategically, couldn't figure out the financial side of things, weren't able to synthesize a lot of business information into something that made sense, where their work product was high quality and respected. And that happens. I mean, it's, again, this is one of those things that's probably no different than any other industry, but people work really hard to get in and then, find out that, oh, this is really harder than I thought, or this is not a good fit for me. So just keep that in mind. I mean, that's a question of fit. Is the work a good fit for you, and knowing yourself and knowing the work. I've also seen it happen on the other side, where people get hired, they do well really early with the financial technical pieces, and then have a hard time with the higher level skill sets, whether that's, figuring out how to work with teams and delegate when you get promoted, working with teams and just helping them along and helping them understand how to get their job done, and letting go of some of the skills, the projects where you feel comfortable. Graduating into more of a business development role, managing clients. I've seen people do well early and then not be able to handle those things. So just know that the job changes over time, so that makes it difficult, and something that you just have to consider. You have to kind of evolve with the job as you move forward and get promoted and do well. Another thing about the work that makes it hard, no surprise here, is that the hours are definitely tough. I mean, especially early on, you could be in the office a lot, you could be in there late. It's easy to burn out when you're working that long for a long period of time. It definitely happened to me. And this definitely ranges with the firm you're with and with the culture there. But it's just the clients we work with are demanding. Transactions are oftentimes sensitive. Time is not a good thing to let these things drag out. So the sooner you can get things done, the better. And that often leads to just urgent projects all the time. And so the hours can be tough. And if that's an environment that you think you could do well in or think you would enjoy, then great. But you still have to kind of manage your health so you don't burn out or as much as possible. And then as you get more senior, I would say the hours in the office perhaps go down, but you're often on call with clients and I don't mean on a call, I mean on call. You could have to do a phone call very early in the morning or very late at night. And as as things get more global and more international in nature, even for a smaller firm for us, I could be working with someone on the West Coast of the US and at the same time working with someone in Europe or Asia. And so that does a lot of things to your schedule and when you take phone calls, when you set things up. And it just, that's the nature of the business. Is the hours are tough. It can be unpredictable and it can be irregular and it can go long at times. The last thing I'll say about just the nature of the work is it can be emotionally draining, which can really wear on you more than other things sometimes, more than you'd expect. Clients can seem unreasonable and really demanding, and that can be okay, but it can wear on you. But I would say what's even harder sometimes is as the advisor, it's sometimes easier to be objective about things than your clients are, especially if you're selling the business. If we're not talking about an investor owner, a public company perhaps where they might be less emotionally attached. For us though, in the middle market, there are often emotions at play because a business owner may have built this company for 30, 40, 50 years. It may be even in the family for the fourth generation or third generation. And when you think about selling a business like that, there are a lot of emotions tied up in that transaction. And at times we're playing part-time counselor. And if you're not equipped to do that, if you're a very logical person and you just don't even want to deal with that stuff, you might struggle, or it might wear on you. It might be frustrating, annoying at times, because to be honest, at certain stages of the process for us, we're not thinking strategically or financial at all. So when you think about getting into this business, that's often what people think about as the main type of work. Well, oftentimes we are getting into very personal things and there are emotions. It can get, I wouldn't say touchy feely, but things are on eggshells. They're on the edge, and our job is to sometimes keep it on track, sometimes listen, sometimes empathize. And if you're not equipped to handle that type of conversation, those types of situations, it can be really draining and really hard work. Maybe not draining, but it's very hard work for you to get good at that and learn how to deal with those situations. All right, we'll move on from the difficulty of the work. The next thing is culture. No surprise, we're hitting that. In episode, the first part of this series, it was episode 66. We talk about the great parts of this business, which the people I mentioned a few times, just working with really high achievers. Well, on the other side of that coin comes with ego, right? People that are driven, people that want to achieve. Not all of them, but can have very big egos, and you have to deal with that. You have to be comfortable with dealing with that. People can be out for themselves. They can be driven to the point of just being selfish and out for themselves. You can have extreme personalities, just people that are very demanding and hard driving, and this can be a shock to some people, even for those before they get into this business who think they are ambitious. You may think you're ambitious, you may think you're driven, but it wouldn't surprise me, no matter what, you could get into a situation you're working with a coworker, with a client who is even more ambitious, more extreme than you are, and sometimes that can be a shock to people. So just be prepared that there very likely is someone out there more driven, more extreme than you are, and if you're used to being kind of the most ambitious person around, it can be a shock to you, and it may wear on you as well. The other thing is there has been, and I think this is one of those things that is changing, has been this locker room culture over the years. If you haven't heard of these books, go check out Monkey Business or Liar's Poker. To me, I think they're at this point exaggerated, extreme examples. I think they were written certainly for entertainment value. They're funny books. They're entertaining, but some of this stuff is true. Some of the stuff is accurate, especially at certain places that some don't exist anymore. But that's okay. Some of it is accurate, so just be aware that could be part of the industry, and that is really firm dependent. That's city dependent. It depends on where you are there. I think one of the biggest things though about culture that I want to hit on it's not a nurturing culture. And what I mean by that is if you're expecting a place where you can be coached and trained well and people can really look out for your career, this is not at this time one of those places where you'll get a lot of that. I think it could be very different. I think this is one of those areas where we could all use some improvement and do a better job of this. But as of right now, you have a lot of type A personalities, people who are driven and expect other people to be self-starters, other people to kind of take care of their own career and develop themselves and find time to do that, whether it's outside of work hours or not. So it's not a place where you should expect to be developed a lot. Now, there are places that are doing this more than others. So if you are looking to get into the business, you need to do a good job of figuring that out. It's not always easy to find that out, but there are places that do this better than others, just like everything else. But in general, I would say you have a lot of type A, a lot of ambitious, just high achievers in general. And I would say generally those people expect the same thing from others. So there's not this system of, this very nurturing culture like some other places might have. All right. Another spot I want to hit on is the financial rewards. And the truth is, I guess I would ask a question. Are the financial rewards in investment banking really better, really greater than in other areas of finance? And I'd say sometimes. Sometimes definitely they are. And especially if you look at what you see in the paper, right? If you see a guy at a huge bulge bracket firm, worked on several $billion deals that year and got his or her bonus was several tens of millions of dollars or $100 million, of course, that's a lot more money that you can make in a lot of different places. However, those are the few people that you see do that. And you could get to the top like that. That's certainly possible. But I would say in general, this definitely changes with the economy that we're in. If you're at the very top of most firms, I think you can do pretty well. I think at the junior levels, you often start out higher than your peers. That's for sure. But I would say in general, there's a bulk in the middle that are, especially when you factor in the hours and the nature of the work and some of the other things, you have to ask: is it worth it for you? We've talked a few times. I've mentioned that no matter what, there are many areas of finance. Most, I would say, whether you're talking about private equity, even being a CFO or a senior level finance person within a company, in corporate insurance, commercial banking, other areas of a bank, other areas of financial services, even wealth management, personal investment advisory, you can do very well in most of those areas where I don't know that you'll make less than money than investment bank. I think in some cases you could make more compared to certain levels of investment bankers at certain firms, certain regions of the country. It really depends. So you kind of have to weigh this with everything. So I wouldn't, the only reason I bring this up is sometimes people get into the business expecting the money to really be what fulfills them and really to give them the check on the scorecard that they're looking for. And I would just caution you that it can be very financially rewarding. It can be part of the overall package, but that doesn't come without sacrifice. It doesn't come without some other things you have to deal with. And I don't necessarily think that it's better than some other areas all the time. So just weigh all of that. I don't know. I don't think it's a guaranteed, yes, I will make more money in this business than anything else. So just think hard about that when you are considering this as a career path. The last thing I'll say in general is I would kind of wrap all of this up in the glamour of what investment banking seems to be, and I think this is probably going away and maybe has gone away already. Some of it's a myth. I mean, no matter what, it's a tough business, like a lot of other businesses. Sometimes you're working with tough people. Sometimes you're working with great people. Yes, you can do financially, especially if you're good at your job and you work hard. The culture, some companies have great cultures, some have terrible cultures, and I think it's really incumbent on you to figure out the type of people you want to work with, the type of work you want to do, and weigh that all with who you are, what your strengths are, who you want to be, what kind of life you want to live, both professionally and personally, and how that all fits together. So no matter what, this always comes down to fit for me. And it's up to you to figure all of that out. So all that being said, to wrap it up, like I said, every firm is different and can vary on where they sit on all these things. So it's up to you to figure out, where you might fit. Firms in the Midwest are very different than those in New York and San Francisco and Boston and Chicago. Large firms are very different than the middle market. So you have to weigh all those things. Now, as I mentioned, I just want to point out one thing to you. I mentioned that I do see some of these things beginning to change, especially on the cultural side. And I will link to an article that was published a week before I am recording this. It was published on June 15th, and the headline is Wall Street Banks Are Desperately Trying to Make Themselves Better Places to Work. And this specific article is about how recently banks have begun to adjust parental leave. So for both spouses, both husband and wife, father and mother, they have begun to adjust the leave policies that employees are getting. And this is just one example and something that I just happened to see a couple days before I was recording this. And I just want to point out to you that this stuff is happening. So as I mentioned at the beginning, I think things could look very different if I were to redo this episode, redo this podcast theme in 5, 6, 7 years from now. So that's it. I hope this was helpful, and I look forward to covering next week's series finale, I would guess you'd say, on how I got into the business. And as weird as that will be to talk about that, I hope you find it useful. Hope you found this one useful. Definitely let me know what you think about it and if you have any questions, and I will talk to you again soon. If you enjoyed this episode and want the complete mixed media mentoring experience, head over to financecareerlaunch.com, click that big blue button, and register for your membership at no charge.